Today, we're looking at whether the big and well-known magazine, The Economist, has actually put a top in the AI market narrative. And then for today's Trading Takeout, we're going to work out how, when, and why we should trade particular assets at certain times over others. But as always, make sure you like this video and click subscribe to ensure that I pop up in your YouTube feed every single day to maintain your trading edge with the best information on the market. So the producer of these videos, he actually used to work for The Economist, and there's a very interesting thing about when The Economist and certain other magazine producers or publications put out front covers talking about certain narratives, and I'm going to show you a little bit more of that. So Hugo, don't take any offense to this. It's absolutely nothing on you guys and all of your work. But The Economist have put out a magazine cover talking about the AI trend. And now they're kind of considering that, perhaps AI goes further here. When they tend to do this, it actually leads to a reversal. And we're already seeing some opportunities in the AI market sort of dissipate a little bit. So this is where we're currently positioned. If we look at, say, a good proxy of this, which is the semiconductor index. So let me just switch over to this tab. So we've seen in just yesterday, actually, that we've put in kind of a topping pattern already. And if we were to look at the weekly, it looks even worse. So we're going to see what happens today with regards to this. But if you can imagine that we're looking at the potential for there to be a massive pin bar here. We've had 5 days straight of S&P 500 bullish cash closes. It tends to be when that happens towards the end of the week, people are going to want to take risk off of the table. Okay. So especially now when the AI sort of market is very, very, not necessarily overblown, but it's very, very bought. The narrative is well bought. And as I said before, one of the best expressions of this is in the semiconductor space. Obviously, to power super fast computers and super fast programming, you need super fast chips. And so semiconductors work really, really well as a proxy here. But I want to go a little bit deeper onto this idea. Now, on my personal my personal business away from Axie, research that I've put out, I wrote a piece called Magazine Covers as a Contrarian Indicator. And this is backed by a guy that I know called Brent Donnelly. He used to be at hedge funds. He used to write a HSBC piece every single day. He's fantastic. Very, very nice guy. He's probably written some of the books that you've read as well, Alpha Trader and things like that. But I recommend you pick that up, actually. And he says that basically the premise behind the indicator, when a magazine cover shines up about certain narratives, is that when a journalist or editor finally devotes a cover to a market trend, company, country, or person, the story or theme has been on vogue for some time and is likely past its peak, which is exactly what AI is right now. Positioning and sentiment should already fully reflect the story on the cover of the publication, and the story should be fully priced in. In other words, by the time a journalist writes about the trend, a majority of the move has already happened. If you think about it logically, a journalist isn't going to write about a trend that isn't popular. The way the media is these days is it relies on clicks, advertising, review, etc. If it gets involved in a topic before it's popular, it's basically a waste of their time. But now, with how Google works, if The Economist is writing about a topic, it's going to be at the top of Google, and so it's going to likely draw more conversions to The Economist. This is the perspective that we need to take on magazine covers. You have to think of the business case as to why someone might be mentioning something. They're not traders. They're not making money off an idea to get in cheap. They're making money off of an idea to be expensive because there's already a lot of views captured. And if you understand then how uninformed traders look at the market, they look at popularity because they think that they don't want to miss out the FOMO. You've probably experienced it yourself. And so with these magazine covers coming out, you can 100% look at it as a reversal or as a top indicator. Reversal indicators actually work really, really well when they're overly negative about something, because it's basically playing the opposite, right? It's playing the fact that, okay, all of that negativity is now priced in. People are clicking, not because it's positive news, but because it's negative news. Now we can get the positivity back. And then if we go further here, the analyst chose 44 magazine covers. The criteria was to seek one that was excessively optimistic or pessimistic about a country or financial asset class. The analyst found that after 6 months, roughly 53.3% of Economist covers are contrarian. After a year, 68.2% of Economist covers are contrarian. That's massive. He reran the study in 2021 and the results were replicated. So magazine covers are a good reverse indicator. So if you are in AI right now, it's probably a good idea to get out. However, just because bad news is widely known and on the cover of a magazine, that doesn't always mean a market reversal is imminent. Back in March 2008, I can't even talk today, JP Morgan bought out Bear Stearns. Investors bought the dip in bank stocks, many believing the worst was now behind them. But of course, it just continued all the way back down. So it doesn't always matter, but I think 68.2% is a fantastic strike rate, especially when you can look at something in context of how the market has in fact behaved over the last couple of days. If you look at how certain stocks are down, Tesla, for example, and certain other ones, the market breadth has slightly increased, but those magnificent seven are showing shakiness at the moment. So the top weighted stocks are showing shakiness, while the mid cap stocks, they're still large caps, but large to mid cap stocks are actually the ones that are doing the gaining. If they start to break down, then we'll see a general breakdown in the entire index. So personally, I think right now, the AI narrative is overblown on a trading context, not necessarily on an innovation and future context, if that makes sense. So always watch out for those magazine covers because they are a fantastic and objective indicator of market turns. Today's Trading Takeout is a relatively quick and simple one, and it is: don't try and fit your view to the market, fit the market to your view. And what I mean by that is, let's say, for example, something's going on in Europe with regards to interest rates. Don't then try and make a case to keep trading Aussie dollar because you like it. Trade something that is euro denominated, because that is going to have the biggest effect. But to get even more specific on this, let's say you have a view that inflation's going to tick up somewhere. Try and find an asset class that is most closely related and sensitive to inflation of that specific geography. Don't then try and make a case for trading your favorite pair or maybe your favorite commodity. It's always got to be market relevant within context. So do change according to what the market is dictating you to do.